I had a very successful event in Singapore. I was there for 10 days. A lot of you showed your affection on me wherever I went, whether it was the streets of Singapore, whether it was at the restaurants, the malls, and more particularly at the events. I wish to thank all of you from the bottom of my heart. My team felt that I had never done a full fledged event in Abu Dhabi, and they wanted me to do so because we have a lot of friends there. So the next event would be in Abu Dhabi on the 5th of October. Those desirous of participating in that event, drop a message at the WhatsApp number given below or send a mail at the email given. My team will get in touch with you.
Hi everyone, welcome back to Be Rich. Happy Sunday. I hope you had a wonderful weekend and you're getting ready to get on with your week ahead. As markets open tomorrow morning, I'll try and reach out to you guys on Instagram and let you know what I think. If there's anything of great consideration to take. As of now, as on this time I'm recording, I have no way to say how the market is going to open on Monday morning, but might be positive because given the fact that the Dow has ended very positive on Friday evening, after a bit of fluctuation of some profit booking, it managed to pull itself up. Maybe the trends of this coming week will also be aligned with that. Who knows? I don't know. But if you do see opportunities there, then we should definitely be looking at different coffee ranges. Do remember, the market and the index broadly might be going up or down. That doesn't mean anything to us. What we should be focused on are our lists of stocks which we are looking at, and are those still in consideration, and are there any correction in those stocks? If there's a correction, you should be brave enough and strong enough to walk in, and if you don't see the correction and if you still feel greedy, please stay away. Wait for it. I'm sure out of a list of 10-12 stocks which you're holding, I'm sure some will be in the red, some will be in the green, and you can take that calculated risk based on your own ideas and what your advisor is telling you. So that's my piece of advice which I wanted to give. Based on that, I had thoughts on this because I've been reading this book. I don't know if some of you have managed to read this book. If you haven't, do read it. It's a nice book. I'm about to finish it. And if one of you would like this copy of this book, which I'm about to finish, reach out to me on Instagram in the challenges group. I'll put up a post there if anyone's interested. Taking this from me, I'll be more than happy to send it to them. They can read it too. And based on this book, I had an idea based on his principles of doing a business and building a business, that we should also, as investors, have some kind of a checklist maybe of how we should evaluate our existing companies, how we should evaluate companies forward, which we plan to invest in. Not in the terms of just metrics, but also in terms of, broadly speaking, the company's culture. What are they doing in terms of solutions? Is it something as a business we would like to be owning, and should we be invested in? I have spoken in greater detail in the challenges group, and I've opened up a conversation there. So those of you at the end of this video would like to come and join me there, can join me in the 52-week challenge in Instagram and join the conversation where we dive into this a little deeper and explore each one. So this is a short video. I don't want to really get into each one too deep, but I just want to touch on the 12 points which should be of use to you. And if you do think anything more I should add to outside from these 12, put it down in the comments below, and I'll definitely look into it and maybe expand the list. Or if you feel maybe one or two should be combined, maybe we can do that and shorten the list and make it easier. Of course, these are my personal views. This is not something like a gold standard. This is just Vinod's personal views. Like I say in all my videos, I'm not my brother. I am a regular Joe investor like you guys, still trying to figure things out. So whenever I happen to chance upon some idea or I read something which is of use, I try and share it to you so we may learn together. So the first one which I thought of was called, are the initial reasons for investing still valid with no consequential external changes? So that means whatever first attracted you to the stock, the moat, the idea or the management is, or the favorable winds blowing for that industry. Let's say you take a sector like cement or steel or whichever, and there's some favorable winds blowing in that direction. Are the moats still intact? Are the management still good? If there's no significant internal changes happening, undermining this factor, then maybe there's nothing to reconsider in this checklist, and you can keep it as a yes or no depending on the way you answer it. So this is the first one. Do you take it yes or no? Are there any initial reasons for this investment to be still valid or no consequential external changes? 2. Do the company's core problems remain unsolved or competing solutions still unproven and inadequate? That means, let's say, this comes from his book. Jamshedji's book, where he found problems in India or opportunities in India, and he started companies to address these opportunities or problems. So the same way, the investment company which you're looking at, what did it originally start this company for? Why did they start it? Are those things still available in the market? Are those potentials available in the market? Are those problems still persisting in the market, in the world, for this company to still offer its solutions, is still making sense? Or other competitors have entered the market offering better solutions than the company you're looking at? And are they doing a better job? And will, in given time, will they start losing their edge? So this is something for you to consider. 3, would the situation deteriorate if you stop investing? So that what this means is, let's say if you stop investing, would you miss out a long-term gain due to a short-term volatility? So let's say there's a short-term market volatility, because of the interest rate from the Fed, or because of some geopolitical situation. There's a short-term spike or a drop in the share, but you staying out investing, do you miss something long-term? Or conversely, is there a risk by holding on to something which is already sinking, that you're going to be expanding your losses? The famous sunk cost fallacy, as Anand would like to say, sunk cost fallacy, where you put in a little bit of capital and you've started losing that capital, and you go chasing it, trying to prevent further losses by putting some good money after a bad idea. So that is something to consider. 4, is more cost effective to hold than sell and reinvest. So you evaluate the transaction costs and the tax implications and everything, and the opportunity cost of reinvesting it elsewhere. That means, let's say you put it somewhere, you've invested in something, and there don't seem any significant growth. So you say, okay, I'm going to sell this and I'm going to reinvest it in something else. But hang on, by selling this, and the tax which you'll have to pay, either short term or long term, and then the reinvesting cost, it doesn't make sense, especially in mutual funds, the exit load and all that which is involved in it. So does it make sense, taking the consideration of the exit load and whatever fines you'll have to pay because you decide to forego this fund and move it to another option? What are the benefits? And do the math behind it and see, are you really set to gain, or are you going to lose? Just because something is attractive doesn't mean, when you actually calculate the numbers and see. 5, is a company attracting more investors and customers? This is very important. So the company which you have entered and you have been investing in, keep an eye on it. Is it advertising its product? Is it trying to attract more customers? What is the market news about its products? Is it favorable? Are customers happy with this product and this company? Goes a lot to tell you about how this company is doing. If it's a retail, if they're doing a B2C, selling directly to consumers, are you seeing the products in the shelves when you enter the market? So keep this in mind. The other thing is, are investors flocking towards this stock? Are they running towards this? Are they also trying to invest in this? So this all kind of gives you a cue on what is happening with this company. Do remember, there are no definitive answers to all this. These are all subjective questions, so the answers will be subjective. I know all of you out there prefer these answers which are completely black and white. So you just say yes or no, and then you move on. So you have to really think a little bit before you answer yes or no. But the point of these questions is to answer yes or no. And that I'll explain to you at the end of the video why yes or no matters. 6, are the management and key stakeholders still enthusiastic, committed, and focused on growth? So this means, is the leadership still effectively navigating the challenges the company is facing? Are the promoters still invested? Are the promoters slowly diluting their stake in the company? This is something really to think about and ponder about. So see, over the period of time, how is the leadership doing? How is the annual report? Read the speeches or the text written in the annual report, especially the opening keynote address from the management or the owner, saying what is his plan, what is his vision, what has he been doing. And don't just read one, read a few of them. They just usually be a page long or a page and a half long in the annual reports. You don't have to read the whole 400, 500 page annual report. Just read. So it kind of gives you a mind, get into the inner workings of the owner or the promoter or the leader of the company. What is the CEO thinking and what is his plan ahead? So this is important to know. So analyze that. 7, are the resources available to continue investing to adjust? So does the company have adequate financial resources? That means the debt, cash reserves, access to capital. Are they able to raise money if they require it? Are they thinking, and if the weather downturn happens, meaning let's say the interest rates goes up or we get into a recession. So what happens to this company? What are the growth opportunities in those conditions for this company? And if it gets cash trapped, due to some situation, will they be continue staying afloat and continue staying in business? COVID lockdowns was a great opportunity to test every single company across the board, because you can pull out and see how did they handle the COVID lockdowns, what happened in their cash reserves, how did they manage this. So this gives you an insight on how this company does this and how the management does this. 8 is a market skepticism resistance declining. That means, let's say a lot of analysts and investors have been writing negative news about this company, and you've been hopeful about it, but you've been worried because they've been having a lot of skepticism around this company. But over a period of time, has the skepticism come down? Like example, Nike. Nike has gone down, and now the CEO has changed. Now it's bouncing back up. So is there really a change in this? Is this something favorable? So let's say you entered Nike at 72 and now it's going to 80 plus. Should you be exiting or not, or what? This kind of answer would also help you to understand what is happening in the broader market. Number 9 is the management and employee team motivated and aligned to achieve goals? So another great way is to go and read about, if you're in LinkedIn, go see how the people working for this company feeling. Let's say if you're looking at ITC, how are people working in ITC feeling about this company? Famously, one of the consultant companies in India recently came in the news for a very negative reason. That shows you what's happening in this company and how the management is dealing with it, because the management came out and said something contra to what they should have said. So it looked really insensitive. So will this kind of, news and treatment of its employees would be a company you want to be invested in? Or is it something you don't think it's the right fit for you, even if in short term or long term the gains look great? So that is also something to keep in mind. Does it align with, your values and your thought process? 10, have key financial targets and milestones been met? So that means you look at what the company said they're going to do and what did they actually achieve over the last few years. This is very simple to do. Open up the annual reports of a few years back, read news reports for a few years back, where these guys would have come out claiming they're going to do this, A, B, C, D, and then see what did they deliver, how much did they deliver. If they were not able to deliver, what happened, why were they not able to deliver? Were the situations in their control or situations out of their control? So that's 10. 11 is, what are the signs of operational and financial progress? So there are clear indications and numbers in terms of improvements. So are they resolving bottlenecks which are there? Is launching new products coming successfully? Is cash flow increasing because of all these new products? Like, for example, iPhone and Apple. You see progressively Apple releasing phone after phone, and you cannot rely on the news just based on what you read in the newspaper. You should actually look up numbers and reports of Apple's and see, are the numbers actually showing? Are the profit margins increasing? Are the cash reserves increasing? Is it keeping with the same pace of percentage points it was doing previously? That gives you actual numbers to look at, and don't fall for news items, because these could be PR stunts being placed in the media, because these days medias are cash strapped. So a lot of editorials which are placed are all paid up. So don't fall for the news which you see, clickbait news, but actually get down and see numbers. And the last one is, 12 is there a tangible achievement, such as a successful product launch or a new contract, proof of business model viability? So here the company is able to demonstrate clearly and its ability to deliver promises through achievements, concrete achievements, and the product launch, a solution, new partnerships. So all this kind of gives you an idea on how the company is doing. So why did I say you should try and answer yes and no on all these questions, the 12 of them? Because if you answer mostly yes, then you should not sell, and maybe you should look at the companies as something you should continue investing in and keep your promises to it. If most of the answer is no, maybe then it's prudent to cut your losses, or maybe hold your position, not add further to it, and keep this analysis going till you see a reason for it to shift to one from the buy to sell or to hold column. So this is the way I would suggest you can look and analyze these companies going forward. Like I said in the beginning of the video, I am there on Instagram, and we're doing a 52-week challenge there. We're trying to learn and become better investors, all of us together as a group effort. So do join us there, and we are talking these points in further detail there, and maybe taking it company-wise and explaining it and taking examples and trying to share more details on it over there. Anyway, other than that, I do wish you a happy Sunday. Have a productive week ahead starting tomorrow. And like I said, do keep an eye on the market. I know we are all busy doing different things. At the same time, consistency is very important to becoming a great investor. So that said, do like and share this video. Do share it with people and friends and family who might find this kind of content interesting and informative. And I would love to read some of your comments on, especially on these 12 points down below and what you thought of it. And nothing more to say. I'll see you in the next one soon. Thank you.
Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog / newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.